You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome to Real Talk Texas. You're listening to Steve Hakes. I'm your host, and today in the studio, we've got Dr. Carl Howe of retirementfoundationgroup.com is his website, and his company is called Val Trust Capital Partners. And we also have an expert, and we're talking about reverse mortgages and trying to clear the air and the misconceptions that are out there. We've got a great guest on the show today. We've got Lorraine Geraci, and she's with Urban Financial Group, and she's our trainer, our resource that I use when connecting people for a reverse mortgage.
You know, Lorraine, I just wanted to ask you, like I said, over the years, I've seen a lot of the clients that I've seen who were interested in, but they had misconceptions about reverse mortgages. And then they were worried about what effect this would have on their children. Several years ago, I was out in the Lubbock area, for instance. And at that time, the oil and gas fields were down, and people's homes, they were going upside down, and they did a reverse mortgage, and they were worried that maybe they'd owe more on their house, or they'd owe more on that reverse mortgage than what their house would be worth when they passed on. Now, what effect would that have on their children if that was the situation?
Carl, that's a really great question that comes up very, very often. Reverse mortgages or home equity conversion mortgages are a government-backed program, and they are backed by the FHA. As such, with accordance with the program, there's a mortgage insurance premium that's associated with actually participating in this. That premium is put in place to protect the homeowner in case anything happens to the lending institution, or if anything happens, such as you just mentioned, where the value of the property is less than the reverse mortgage payback plus interest. The difference is forgiven. And what that means is neither the homeowner nor any of their heirs would ever have to pay back more than the value of the property at the time of sale, even if it does not cover the entire amount of the mortgage balance. So the government has instituted that. Yep, that's a very big protective device that Congress had put together to help oversee the program and make sure that any lending institution or any brokerage firm that's utilizing this program to help older adults make sure that they really are consistent with that intent of Congress, and that goes back into the late 80s.
Okay, that's great. Now I want to get back into some questions I think are going through my head. All right, so how old do you have to be able to take advantage of a reverse mortgage?
You have to be 62 or older.
Okay. And what types of reverse mortgages? Can I get a lump sum, or can I get like a monthly payment out of it? How's it work?
There are basically two types of reverse mortgages that are available right now. One provides a fixed interest rate for those clients who are interested in, making sure that the interest that grows on the mortgage balance is fixed. And that is only going to allow the client to take out a lump sum at closing. The government has instituted a protective device to only allow 60% of the available proceeds in the first year available to them, and they can take that out at closing and do whatever they would like with it. The adjustable rate reverse mortgage is another option, and I actually am a big proponent of this because it allows clients to be able to be more flexible in how they receive their proceeds. They can either get a monthly payment for the rest of their years, no matter how long they live at the property. They can get a monthly payment for a termed number of years if they're looking to get additional funds that are required. And they can also have what's called a line of credit, and that is my favorite thing in the whole wide world to provide to these folks. I've done a few hundred reverse mortgages in my day, and most of them were adjustable rate line of credits. If somebody doesn't need all of that money up front, they have the opportunity of leaving it in a credit line, very similar to a home equity line of credit. However, that money is available equity out of the property that while it's being housed to be used at a future date, it is growing at the same rate that interest is growing on the money that's already been borrowed. So the amount of that equity is constantly growing and available for the client for future use. You don't pay it back unless you use it. So really good option for some people.
That sounds awesome. Let me ask you this, okay? So let's say I live in the DFW, North Texas market. I own a home, and say it's worth $300,000. And I owe I've been in it a long time. I don't own it free and clear. Maybe I owe $50,000 on it. How much money would be available on that line of credit?
Without going through the actual program to get the details, basically what would happen is, depending on the age of the client, the older that you are, the more money you're going to get out of that. So, for example, if you have a certain value property, you're going to get a percentage of that. Let's say, for example, let's say it's 50% of the equity. The rest of the equity has to stay in the property. The reverse mortgage clients are given just a piece of the equity based on their age and the interest rate associated with the loan. So once any loans or liens are paid off on the property that are owed, the difference is given to the client however they see fit. So again, there's still plenty of equity left in the home that has to maintain itself there for a period of time. So basically, they'll probably get about 50% of it.
Lorraine, that brings up an interesting point. So if I'm working with a client, and let's say that they're on a fixed income, and they've got their Social Security, and if they're blessed enough to have a pension, they might have that coming in, or they're living off their IRA, but they're having trouble making ends meet each month, and they still have that mortgage payment. They don't owe that much on it, but they still owe something on it. Then this would be a way for them to actually get rid of that payment and free up some cash, correct?
That's absolutely right. And more often than not, we're finding that depending on the age group of the clients that we're working with, many of them still have an average amount of $80,000, which is the median across the country, at least owed on their property that has to be paid off. As long as the reverse mortgage proceeds allow enough money, enough resources to pay off the existing loan and have money left over or not for the client, they can pay off whatever they owe. And again, it'll alleviate them from having that monthly mortgage payment. So that amount of money that they were paying gets to go into their monthly income and just increase the amount of expendable cash that they will have for other means.
Oh, that's great. I have another question. In Texas, we have a situation called the Lady Bird deed. You're probably familiar with it, the life estate deed. And now a lot of people we see do this because that protects their estate or their house from having to go through probate when they pass on. Is that available with reverse mortgage?
Absolutely, yes. It's a very good question. We get that quite often as well. If a client has a life estate deed on their private property or life tenancy, and depending on what state you're in, I know it has a different word. I've never heard of ladybird, though. That's pretty cool. But basically, as long as the client is on there as a life estate tenant, and whomever is on the deed, let's say it's a child that is on the deed itself, they would participate in part of the reverse mortgage transaction by just signing paperwork that indicates that they're aware that a reverse mortgage is taking place. But yes, they can proceed with the program even with a life estate on the property.
I was just looking up some statistics, and in Texas, there's about 2.7 million people that really would qualify and should look into this. So I'm sure a lot of our listeners out there and the demographics of KLIF and who we have listening out there, I'm glad that you're on, Lorraine, so we can educate them and give them more information. If you want some more information about reverse mortgage and you need some help, maybe it's for yourself or for your parents, go ahead and pull out your cell phone. I want you to put in the show number and send me a text at 817-925-2546. That's 817-925-2546. Just put in the word reverse or call and leave a message on that same line. If you're driving, please don't text while you're driving. And you can leave that message, and we'll get back to you on Monday first thing. Okay, so we're going to go talk about the different types of uses for reverse mortgages. Are there limitations on what you can do with this money, Lorraine?
No, absolutely not. It really provides people with an opportunity to be flexible. Everybody has a different reason why they need to utilize proceeds. Whether it's to pay off an existing mortgage, as Carl and I spoke about before, consolidate other debts. You'd be surprised how many older adults have credit card debt from needed to utilize this to pay for, everyday expenses. Some people just want to supplement their monthly income or provide some modifications to their home, health expenses, or to help family, etc. Another thing that, and Carl, I bet your ears are going to perk up right now because it's very important, and people are not recognizing the future need for long-term care insurance as well. More often than not, people don't realize that folks are going to more likely need long-term care insurance than they will automobile insurance in their future. So, again, another reason to consider possibly planning ahead and doing some estate planning, because long-term care insurance is something that's very much going to be needed in the future. That's a big focus for a lot of folks as well.
Well, that's really important, and I know, Carl,
Yeah,
we've talked about this on previous shows that you've been on the show about long-term care insurance and what you need to take care of there. We're going to go to a break. We're going to come back. We're going to
Bring
pick up
that
where
up
we
in the
left
next
off. I know Carl's he's anxious to jump in on this. So you're listening to KLIF AM 570. This is the Real Talk Texas show. I'm your host, Steve Hakes. We'll be back after the break with more on reverse mortgages.